I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. It's the Mortgage Brothers podcast show, interest rate update, and it's June 6th, Monday.
Monday. We were talking, does anyone here in the office have a case of the Mondays? I don't think so. I think everyone's excited to be here.
Everyone's excited for Monday. Interest rate update. If you're new to the channel, be sure to subscribe, like, and comment. Give us your scenarios. Anything you wanted to share with us, be sure to do that. And again, this is not financial advice.
That's right, because we're smart folks, but we are not brain surgeons.
That's right. This is only for informational purposes. But we're showing you today where interest rates are for the 30-year fix at 4.99%, a little bit higher than Friday. The 15-year fix at 4.25, also a little bit higher.
Going to the 5-year ARM of 4.625, the 30-year FHA 4.375, and the 30-year VA 4.375.
And these interest rate quotes are based off of these scenarios for the conventional FHA and VA, based off of these assumptions right here on the screen. And these interest rates do not come with any extra points, any like buy down points.
No hidden fees. Yeah.
That's right.
No hidden surcharges. What do we call them? When you fly, no like baggage check fees.
Yeah. And you will be surprised how many people contact us and say, yeah, I got quoted 4.99 or 5%. And you look at their like loan estimate and it will show like a whole like $3,000 extra fee for it, in the origination for a buy down.
Absolutely. Yeah, no, very, very big deal. So if you have something like that, you want to send it to us, feel free to send it to us. We will confirm whether or not there are points or no points.
And I mean this like the most honest, and to be honest, like most banks are charging higher rates. Mm-hmm. It's just right now we're seeing higher rates than usual. And again, most banks. So be careful out there.
Yeah, and who wants to show high rates?
Yeah.
Hey, come work with us. We have really high rates. No, they will show a lower rate and then have that little point charge in order to allow them to show a lower rate.
Yeah. Okay, so going right into the kind of big picture slide, we've shown this a bit here. The 30-year fix going back to 1971. Remember, it's kind of we zoom out, we can see where the interest rates are and historically how low they are even currently. So in 1981, we saw the interest rates hit that high at 18.3% for that 30-year fix.
You still need to find somebody to interview them. Unbelievable.
Be sure to comment. No one's been commenting about no one's told us.
We'll have to throw out a reward or something.
Yeah, if you had a 18% rate.
Yeah, wow.
And again, this channel right here, you notice that we just kind of were stuck in this channel. Looks like a pipe going down here, this dotted line.
Yeah, I think we call it the interest rate slide.
Yeah.
I mean, look at it. It just is about as, you kind of love to jump on that thing and just slide down. It's very consistent over how many years? We're saying about 36 years?
36 years. And we've just busted up out of this. This is March in 2022. Again, this is all primarily from the U.S. government printing, printing more money. Mm-hmm. Printing money, it's the extra debt. It's all debt related. Mm-hmm. Lower interest rates make those interest payments more affordable for the U.S. economy.
Yeah, and printing money, that's when it starts to get cerebral. People talk about printing money, and that was something like our parents and our grandparents used to talk about. We're not expecting, everyone to understand what that means. It's even difficult, for us to understand exactly the implications of it. But the big premise is we have been making more money, and we can't afford to keep paying the debt on that money. Someone has to pay the piper.
Exactly. And so inflation is so tied to this, and we're going to be showing you in this next slide. This is Maricopa County with the median home price is $495,000. And right now, most experts are calling for about a 7% appreciation for the next 12 months of real estate. And really that appreciation, you can say whether it's appreciation or inflation, it's really the same.
Yeah, they mean the same thing.
It really is the same thing. And real estate, these are real assets. You can actually
they call it real for a reason.
Yeah, it's illegally. Yeah, it's a real asset. If you take the $495,000 and you look at what is 7% on a month, appreciation on a
annual
monthly basis.
That's annual.
Oh, right. So 7% is an annual, 7% annually. But on a monthly basis, that equals $2,858.
Yeah, think about it. If all of a sudden you got a call from your grandpa that said, "Hey, I'm giving you $495,000. Put that into a bank, and that bank's gonna give you 7% interest." You would be as excited about the 495 gift as you would be, or you'd be as excited about that 7% return.
Yeah.
I mean, that's huge.
Yeah,
7%. That's what happens when you actually purchase.
Every month that, and of course this is hypothetical, this is not like
it's not real. Well, yeah, this is hypothetical and it's not realized money.
Yeah.
But that's what happens when you put yourself into a home. Eventually, when you sell, you're going to look back and say, "Oh, that's what I made every month, every year."
Exactly. So that $495,000 home next month should be $2,858 more. Every month just keeps on going up. Even actually in increases, right? Because it's just constantly
compounding appreciation.
And that appreciation, right? That inflation of $2,858. Look at it. It's just about equal to the house payment.
That would be your total mortgage payment if you put 5% down.
If someone put 5% down, I know that this looks kind of confusing. There's a lot here, but these are the mortgage payments. $3,000 a month in mortgage payments. If you put 3% down, 5% down, that about $2,900. That's the total payment, including taxes and insurance and a little HOA.
Amazing.
And that's how much inflation it equals, just about the 5% down payment.
Yeah, and remember, folks, there's not a lot that inflates. Today we have cars inflating. They typically don't inflate, but again, coffee cups, the things that we consume do not inflate. And so one of the items that we're focusing on are these real estate, properties. They are going to appreciate. There's very few things in our lives that actually will appreciate.
That's right. And stay with the channel. Be sure to subscribe and like, because you're going to be asking questions, probably have been asking questions. Well, gosh, isn't there a recession coming? What if house prices decrease? We're going to cover this. Just keep on this Monday through Friday. We keep on touching on these topics. So be sure to stick with us and subscribe.
And give us a call, folks.
Take care, everybody. Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.